everybody. It's Jessica Stone at Stansberry Research, along with senior analyst Scott Garliss, who's also the editor of the Stansberry Newswire. We wanted to talk about all of the ways we're working from home and how that and all of the technology associated with that can create investment opportunities. Right now, we're coming to you on Skype. There's obviously a lot of competitors to that kind of service. What do you expect within the technology sector itself in terms of opportunities for investors, Scott?
I think demand's going to pick up. I don't know if you can see behind me, but we have my son's homeschool set up, his virtual school. We have an iPad. We're going to be using Zoom Media, and the teachers also recommended we purchase some stuff off of Amazon to use. So already, I mean, there are three examples of companies, Apple, Zoom Media, and Amazon, that are all going to be beneficiaries of what's going to go on.
And if we take a step removed from the ways that we're working online, there obviously has to be a place to store all of this. So if there's more demand, let's say Microsoft says in the first week it saw a 40% jump in demand for its online services, then there has to be a place to store all of this information. Does that create an opportunity?
100%. I mean, the people that are really going to see demand pick up are the data storage companies, and that's going to be cloud plays. Think about Amazon, AWS, Amazon Web Services. It's gigantic. I mean, the company wasn't profitable until that unit started, and now it's really taken off. Microsoft, Azure, that's their cloud play. That was what Satya Nadella, the CEO, brought in when he took over, and that has been a huge growth opportunity for Microsoft. Another company you can look at, Digital Realty. What they do is they rent out space for people to put server farms, basically, so they can store data too. This is all going to be wind in the sails of that business.
What about the guts of those organizations? Do we need to be thinking about the people who make the wires and the chips and the semiconductors inside those server farms?
100%. I think companies that, to your point, are going to benefit are the guys that make the guts. I think a couple of companies in particular, you're going to think about NVIDIA and Intel, Advanced Micro Devices, Micron, Seagate, Western Digital. These are all plays that are going to help this data storage. Other companies you should consider too are going to be companies that do things like online movies, Disney Plus, Apple, Amazon's another one. I mean, we've already had Amazon offers, the movie companies are sending movies directly to Amazon now because the movie theaters are effectively shut down. My wife has already talked to the kids about watching a couple of them. It's great. I think you could see that space explode. What will be interesting is what's going to be the after effect of this. If the movie theaters stay shut for a long time, are movies going to start bailing on going to the theater, and that experience is sort of lost and they just go direct to the home?
Yeah, it will be interesting to see. And it's been very interesting to see how some of these services and competitors to Netflix have launched during this time and are getting a lot of extra attention just because there is this glut of people that are looking for something to do and they don't necessarily want to go outside or can't go outside. So, But I guess I wonder, because I'm doing so much online, I'm working, I'm buying things, I'm ordering groceries. Do you think that we're more vulnerable as a population of people during this time when we're doing more online, whether it's our finances or our identities? Like, should I be boning up on cybersecurity, for example, like a Xander or something? I don't know who's publicly traded, but those might be things to think about as well.
Yeah, 100%. So let's back it up for a second and let's look at some of the things that we're going to do. So one of the things we saw with China was China has an economy that's very based around electronic payments. They've sort of gotten rid of a lot of cash. So companies like Alipay, Alibaba, WeChat from Tencent, they have exploded their usage, and that sort of helped people there get through this because there wasn't a transfer of physical dollars that are loaded with germs. So now what we're probably going to see here in the U.S. is a similar type action. I know last week I experienced it when I was dealing with people handing money in a cash register. They kind of backed off almost a little bit or touched it as lightly as they could, but they were happier to take a credit card. Even though a credit card, you're probably still transferring germs, it's less so than having cash. So this could drive the usage of electronic payments. Think about companies like Square, Venmo, who's owned by PayPal. I would even think like Visa and MasterCard, just because they're credit cards, you can put information online. Also, you're also going to see in the entertainment space, gaming companies. Kids are going to want to play more games. Parents are going to want them to play more games. you know, Electronic Arts, what's the other one? Activision. They're probably going to see demand for all of their goods. But one of the problems is all of this is going to make you put more information out there on the internet that could be available to people looking to hack. And so they're looking to steal your information. Companies like Palo Alto, Cisco, Proofpoint, F5, there are a couple of ETFs, the ETFMG cybersecurity ETF and the First Trust NASDAQ cybersecurity ETF. These should all be beneficiaries.
Wow, lots to think about there and a lot of ticker symbols to look up from here on out. Thanks so much, Scott Garliss, for joining us. We appreciate your time.
Thanks for your time. Have a great day.
And if you would like to find more content like this, please subscribe to our YouTube channel. And you can also find us on Instagram, Facebook, and Twitter. Thanks for watching.